all the panelists and dear participants. Good afternoon to all of you. Thank you so much for joining the 12th edition of CII Financial Markets Summit. Uh, this is a special plenary session on mutual funds securing future financial independence of Indians. Now, this session will be moderated by Mr. Sachin Gupta. He is the Chief Rating Officer at Care Ratings. He has a total experience of 21 years in leadership positions across credit ratings business, financial sector ratings, infrastructure ratings, corporate ratings, business development strategy, and rating committees. And he is an alumni of Delhi College of Engineering and MBA in Finance from Faculty of Management Studies. Mr. Gupta, thank you so much for joining us and agreeing to moderate this session with all the eminent panelists present over there. So may I now request you to kindly take over the session, please? Thank you so much.
Thanks, Deepak. Thanks a lot. Good afternoon, ladies and gentlemen. A very warm welcome to all of you for this session. Mutual funds securing future financial independence of Indians. As Deepak said, I am Sachin Gupta, Chief Rating Officer at Care Ratings, and it gives me a great pleasure to moderate this discussion. Let me start with introducing our esteemed panelists. First, we have with us Mr. Imtiazur Rahman. He's the Managing Director and CEO of UTI Asset Management Company Limited, and he has been with the group since 1998 and with UTI AMC since 2003. As CEO of the company, he is responsible for overseeing the strategic initiatives of the company and its subsidiaries. He has 3 decades of experience in management, business leadership, leading change and forming strategic alliances. Mr. Rahman is a science graduate, postgraduate diploma in computer applications, fellow of Institute of Cost Accountants of India, fellow of Institute of Company Secretaries, and certified public accountant, USA. Hello, Mr. Rahman, a very warm welcome.
Thank you.
Then we have with us Mr. Nilesh Shah, Group President and Managing Director of Kotak Mahindra Asset Management Company Limited. Nilesh was part of the team that has received the Best Fund House of the Year award at all the mutual funds where he's worked for, namely Kotak Mutual Fund, ICICI Prudential, and Franklin Templeton over the last 3 decades. Nilesh is the chairman of Association of Mutual Funds in India, AMFI, and he's also a member of Mutual Fund Advisory Committee and a part-time member of the Economic Advisory Council to the Prime Minister. Nilesh was also featured in the top 50 people of India by India Today for calendar year 2020. Hello, Nilesh.
Thank you.
Then we have with us Mr. Sandeep Sikka, Executive Director and CEO of Nippon Life India Asset Management Limited. Sandeep joined Nippon Asset Management in 2003, holding various leadership positions before being elevated in 2009 when he became one of the youngest CEOs of India. He is an alumnus of the Harvard Business School and he works closely with the regulatory bodies, that is RBI, SEBI, and Ministry of Finance on matters related to asset management. Hello, Sandeep. Then we have with us Mr. Vishal Kapoor, Managing Director and CEO of IDFC Asset Management Company Limited. Vishal has over 2 decades of rich experience in financial services across business, including asset management and banking, and a successful track record of building strong teams and sustainable business. Prior to joining IDFC AMC, he's worked with Standard Chartered Bank as the Managing Director and Head of Wealth Management. Mr. Kapoor has been an active contributor to the development of the wealth management industry, and he has been a member of several industry working groups constituted by regulators and industry association. Hello, everyone, once again. So, today's topic of discussion, as all of you know, is mutual funds securing financial independence of Indians. Mutual funds over the last many years have seen a sound growth across equity, debt, and hybrid schemes. Today, the total of asset under management of mutual funds stands around rupees 35 lakh crores. And mutual funds are increasingly becoming more and more mainstream for the Indian investors. Now, while the industry has seen a healthy growth, the AUM is still, just around 1/4 of our GDP, compared to nearly 1.5 to 2 times of GDP as we see in some of the developed countries. Now, this also means that there is a significant scope of the growth for the industry. So the question in front of us today is, how do we see the next round of growth for this industry? And how do we see mutual funds, being able to secure the future financial independence of Indians? So let me, start the discussion with the first question to Nilesh. Nilesh, in its growth journey, where do you see the mutual fund industry as of today? Are we looking at a steady growth from here on? Or are you seeing this right now as the tipping point on the hockey stick or a J curve, as we say? Over to you, Nilesh.
Thank you, Sachin. I think mutual fund is at a takeoff stage. Many people believe we are in the business of managing money. In my opinion, we are in the business of managing investors' trust. Trust gets built over a period of time. And the word of mouth publicity brings that takeoff stage in the mutual fund industry. Today, while a large portion of our money comes from top 8 cities, we are seeing explosive growth in below 8 cities as well. Today, we are seeing contributions from high net worth individuals and family offices and institutional investors. But we are also seeing participation from retail investors starting with even 100 rupee. Today, we are seeing mutual fund industry's physical presence across India, and we are also seeing digital penetration reaching us to virtually all the pin codes of India. Most importantly, we are now having satisfied investors passing the message to other non-investors in mutual fund. More importantly, SEBI supported mutual fund industry through committed IAP campaign, and mutual fund Sahi Hai has resonated throughout the India. It's now mutual funds are no longer India product, it is also Bharat product. Put all these things together, I believe we are at a takeoff stage on J curve. What we have achieved in terms of last 20, 30 years, we will see far higher growth in next 20, 30 years.
Got it. Thanks, Nilesh. Let me come to Vishal. Vishal, now while Nilesh has mentioned that we are kind of pretty much at the cusp of a healthy growth. Now, one concern or doubt which people have is that it's the growth in mutual fund industry is on the back of buoyant equity markets. So the markets are doing well today. Therefore, there may be higher inflows. Maybe last year it was a year of surplus savings, and therefore we had a healthy growth. How do you see it again, going forward in terms of the growth and sustainable growth rather?
Thanks, Sachin. See, firstly, I think the question that growth has been a recent phenomenon and it's just the last few quarters. I think we have to look at that differently with a bit more of the longer term trends. So if you look at, for example, the last 10 years, mutual fund AUM has grown 5 times, for just about 7 lakh crores or so. As we know, we are now past the 36 lakh crore number in terms of total assets. Even if you look at just the last 5 years, it's grown almost 2.5 times or so. So these are very impressive, very, very solid growth rates. So I wouldn't call it a recent phenomenon just driven by equity going up or savings going up. The second thing that you mentioned is interesting, and that's actually a part of a longer term trend, which is the financialization of savings. I think we all understand that Indians have been great savers. We are even among emerging markets, we have among the higher savings rates, within which a large part was going into real assets, only a part was coming into financial assets. And that shift towards more and more of financialization of savings has been a secular trend. That's something we have to keep in mind. Just to give you an example of the size of that pool, from just about 1.5 lakh crores in FY15, financial savings have grown to about 23 lakh crores or so in FY20. So that's significant amount of new savings coming into the financial pool. Third point is that within that financial pool, mutual fund as a component has been growing very, very steadily. So while we used to be about 3.5% of that pool, we've now grown steadily, in fact, among the fastest within that pool to be about 5.5-6% or so. So across all of these parameters, I think it is very clear that there is a lot of headroom. Some of the indicators Nilesh bhai already mentioned, you mentioned as well. When you look at AUM to GDP ratio, for example, we are far below the global average of about 60%. We are just about mid-teens or so. If you look at AUM to deposit as a ratio, again, similar picture, maybe we're about 20 odd percent, when even China, which has been a recent growth story in mutual funds, is well above 46%. The US is at 160% or so. So there is a lot of headroom there. In terms of the number of people that we can actually, go to, the industry is past the 10 crore number in terms of folios. But when you compare this to the number of total, let's say, debit cards issued by banks, that number is closer to 85 to 90 crores. So, there is still, again, a lot of headroom. All of these indicators, I would say, combine to actually offer us a lot of headroom for growth. The reality also is, and something Nilesh Bhai touched upon, is that now it is well established as a great product, and that's come from satisfied investors. That we have to keep in mind that this is growing because people have had a good experience investing in mutual funds. So it's well regulated. It's product that's performed. It gives you liquidity. It's very transparent. There are so many other benefits to the mutual fund product, and that has shown right through this entire volatile phase in the market as well. Where even in the last year's phase, where markets were so volatile, SIP flows, the total number of flows, etc., all of these have trended very positively. So overall, I would say a lot of headroom for growth. I don't think this is just a recent phenomenon.
Got it. Thanks, Vishal. Let me get Mr. Rahman in the discussion. Something Vishal mentioned just now, that as a percentage of deposits, mutual funds, bank deposits, that is, they were 3.5%, now they're 5.5%, but still they're only 5.5%. Does that, and somewhere Vishal mentioned that for US it's like 50-60%. Now, does it mean that Indian investor, is being a little bit more risk averse, and therefore, compared to putting money in bank deposits, is not really that much keen on putting money in the mutual fund? So how do you see that? Because that's a really big pool. 150 lakh crores of deposits is a big number. Do you see that as a thing that can change going forward?
Thank you, Sachin. First of all, I would say that before I go and be specific on this particular point, I would say that this decade is the decade for our country. And most importantly, this is a decade for our mutual fund industry. So this 2021 to 30 is our period. And I don't feel we should take it mutual fund versus the bank deposits. It is one of the financial products, and all the financial products must coexist. It is very, very important that all financial products should coexist. But growth is life. Whenever I visited the Reliance office, one tagline which always inspired me is the growth is life. And this is the growth which will give the financial independence to investor. And this growth will allow the investor to think beyond the fixed deposits. It is very important. And I don't know whether we are on the J curve or V curve or which curve which we are. But so far as growth is concerned, Vishal has pointed out that we are currently managing 11 crore folio. The very eye-opening number which I would give it to you, in the last 12 months, our industry put together has added 1.4 crore folios. So it is a very good number, around over 30% number we have added in the last 12 months. So growth is very important, and the traditional investor is also started migrating from the fixed deposit to or adding the mutual fund along with the fixed deposit. They are not migrating. I don't feel migration is the right word. But as a mutual fund industry, we serve the investor across the life stage. And the most important people who will be our investor is the Gen Y and Gen Z. These folks have actively tracking and have started investing in the mutual fund industry. You see the data of growth, and they are indicating the very, very great numbers. Let me share a story with you of my own story. I have a boy who is 18 years old. He gets 5,000 rupees pocket money from me. And he has chosen 5 funds other than UTI because his father invests in his name as a SIP, and he is using the Grow as a channel to invest in as a SIP, and he has got a wow experience. So it is the experience which matters to the investor. Thanks to the two past chairman of one past chairman of AMFI, another chairman, current chairman, Sandeep and Nilesh Bhai, our industry body has done a terrific job in going nook and corner and educating the investor that how mutual fund can add values to their life. Mutual fund sahi hai. Thanks to Nilesh Bhai and other active members like Bala and Sandeep, they were in a position to convince SEBI that please allow Celebratory to also do some ad work for us. And this is really working very well. So I would say that mutual fund as an industry will not only meet the requirement above the to meet the inflations, but we will provide the financial security for all stages of life. If anybody wants to go for the foreign educations, we can do that. And most recently, the ESG product. Sachin, over to you. Thank you.
Thank you, sir. Thanks a lot. Sandeep, what I'm realizing, increasingly across the financial services domain, there is a more and more inroads being made by the fintech companies. How do you see the mutual fund space, being either disrupted or, challenged for growth or cost additions or cost reductions? How do you see it really changing the industry dynamics going forward?
Thanks, Sachin. I think let me, first I think take your opening comments. I think where are we as an industry, and then I think I'll come to the fintech part.
Sure, sure.
I think I personally feel we are at the best stage where I think the only way where direction the industry can go is go up. And I think one of your opening comments, I think we are one fourth the of our GDP, the AUM industry AUM. I think it's time now we have to change the barometer for the success of the mutual fund industry. I think we need to start seeing that how many households are investing in mutual fund. And I can thumb the table and say we're at a stage where every Indian household will be a mutual fund investor in the next decade. And what gives me confidence is mutual funds or investment behavior. It takes generation to change the behavior of a person. So when I look back in 2020, when I look back in my home, my father retired from government service. I had to convince him to put money into mutual funds because he was a traditional investor. 20 years later, my daughter gets a stipend and I don't have to tell her, but she invests in mutual fund. And also the way my father invested 20 years back and the way my daughter invested, the big difference is he still believes after 20 years after investing in mutual fund, believes in offline, whereas my daughter only wants to use the smartphone and invest. The point why I am trying to give this background is, I think we should get away with this notion of disruption. Fintech is going to facilitate the growth of the industry. If you were to look at, India has the second highest smartphone population in the world after China. And technology is going to be an enabler for us to go more deep. Again, if you were to look at the data, in India, every year we sell 2.5 crores two-wheelers. The day is not far away when these 2.5 crores people who are paying EMIs to get to buy a scooter will also be investing in SIPs. So I think I clearly believe this is the best time for the country. And I think it's also very important to understand the big change in investment behavior has already started. Rehman Bhai mentioned about the bank deposits. I think there was a time way back 10 years back or 15 years back when the bank deposits used to give a double-digit return. And Indians confused savings and investment. When you're getting double-digit returns, 15% or 14% return, and your money doubles in 5 years, you don't have to look anywhere else. Right now, everything has fallen in line for the growth of the mutual fund industry. And with respect to your question to fintechs, we believe fintechs are going to be the next enablers for the mutual funds to go into the hinterland or into Bharat. Let's again go back to the last financial year. India saw highest number of demat accounts getting opened. A lot of times, a lot of questions come to us. People have started investing directly. Will they come to mutual funds? I think I take it the other way around. We are right now, because of technology, seeing deepening of the base of the Indian capital markets. The investors who are coming in directly in stocks during this COVID period when work from home was happening, when they go back to their day job, they'll start investing in through mutual funds. And let's again go back to move this discussion away from fintechs as a disruptor. All these broking companies, online broking companies which came, they have given new population which will be investing in capital markets. And these fintech companies are actually, again, I'm saying, going to be the biggest enablers for the growth of the mutual fund industry. But will the physical infrastructure or the physical or the distributors, this thing go away? Answer is no. We are in for next 15, 20 years where both will coexist. There are micro markets. My father will continue working through his advisor, and my daughter will continue through investing through a smartphone. So I do not take fintech as a disruption. I take fintech as an enabler for us to reach every Indian household.
Great, thanks, Sandeep. Very helpful. And I think across the panel, we're clearly getting a very strong view that we are at the cusp of growth. Across geography, across income levels, across generations, and that's very heartening to see. If I move the discussion now to in terms of the specific sub segments. So Nilesh, if I could ask this to you, what are the segments within the assets, the underlying assets that you invest, that mutual funds invest? Do you see any change there? Could there be new products, something that will drive the growth faster and maybe more suited, especially as our topic says, securing financial independence? So do we have it all, or do you see some new products kind of coming in there?
Sachin, change is constant. If we don't evolve with time, we will get outdated. Now, we also have responsibility of evolving with discipline so that the trust and confidence of investor is maintained. Today, mutual fund is primarily fixed income and gold, fixed income and equity. We have some amount of gold and offshore funds, but tomorrow there will be many innovations. Offshore funds will expand multiple times from current level. Commodity funds will move beyond gold, and SEBI has already issued guidelines for silver ETF. There will be also asset allocation kind of funds, which will be multiple times today. If I have to sum up mutual funds journey over next 20, 30 years, we will move from being an investment product to solution product. Today, we are getting money across asset classes. Tomorrow, we will be providing solutions to investors across various objectives. I will move from transactional relationship to becoming part and parcel of day-to-day life of an investor. This journey of mutual fund can't be possible without innovation. We will have to develop newer and newer products which meets needs of the investors, which delivers return to investors, and which helps them fulfill their dreams. So change is only constant, and we are thankful to SEBI, which has engaged with mutual fund industry for instituting various steps. They are making us safer, more regulated, more transparent. And this is one financial services industry where we are not only comparable to global benchmarks, but also ahead in many parameters. I don't think so. The world has seen anything like mutual fund Sahi Hai campaign at the industry level. My colleague Vishal will probably mention, but as MFI, we are also taking several steps to ensure that the penetration and distribution of mutual fund will expand further from current level. So while we are taking many steps to ensure that mutual fund becomes part and parcel of every investor's life, and as Sandeep bhai mentioned, every household becomes an investor in mutual fund over a decade or so, we will also ensure that through product innovation, through service innovation, through cost innovation, we help investors fulfill their dreams, their objectives, and we move from transaction to a long-term relationship. We move from investment to solution.
Got it. Thanks, Nilesh bhai. And very true. Change is the only constant, and I think this industry has evolved quite a bit, and increasingly becoming more and more mainstream. My next question, Vishal, is on the debt side. Just to kind of see, somewhere we see a bit of dichotomy here. If you see the equity markets today, they are at some people say dizzying heights. Today, I think we touched 59,000. So that's there. So obviously there is a risk appetite which is there for mutual funds, for investors in general, we can say. But when I look at the debt side, there the risk taking abilities actually come down over the last few years, as we see. Earlier there was a time when only AAA's bonds were invested. Now over the last few years there was a bit of going down the credit spectrum, risk spectrum rather. But now again we see in the last few months or few quarters, I would say, we are the investments are happening more and more only in the highly rated securities. So when we are looking at such growth happening, ultimately there has to be investments that have to be done. And do you see debt becoming investments in debt, bonds, commercial papers, NCDs, other structured instruments, that really driving the growth in some ways going forward? And how do you see mutual funds kind of playing that active role?
Right. Thanks, Sachin. So I think we have to take a look at it from the prism of the investor or the saver in many ways. And that's where when we look at the average individual, we must know that, and Nilesh bhai mentioned earlier that this is a journey. We have all been great savers. We have not been great investors as a nation. And that leap from saving to investing, I think we must recognize, entails taking some amount of risk. Because it's the first time that you're going to introduce someone to the concept of volatility and the potential of losing some capital, even if it is for short periods of time. It could be for longer periods of time also. Now that's easier said than done, and that's a behavioral change. So even while the industry has grown and so much of growth has happened in the equity markets, which you just mentioned, we are hitting an all-time high today, and the market's been on a roll. The reality of the saver is that I would estimate that for every rupee of stock market investment that the average saver has today, 5 times of that is actually in debt in some form or the other, whether it is contractual savings or whether it is fixed deposits or whether it is some form of an annuity or essentially a debt type product. But that's the potential that we have in front as well. That despite the great move in the equity market and so much depth over the last 2.5 decades, actually 5x of that amount is sitting with savers in some form of debt. And that's where I think the role of mutual funds in helping clients ease in or investors ease in from saving to investing and using debt products as that first step becomes very, very critical. Because that's the first product when you get used to the concept of full transparency, mark-to-market pricing, and the concept of some amount of volatility and some amount of risk can be taken gradually. So that to me is a critical role that mutual funds must play. It is already a large industry; it's not small. At about 36 lakhs crores, roughly about 15-16 lakh crores is already in debt. So it's a very large, 40-45% of our industry is actually debt. Uniquely, most of this debt is actually held by very sophisticated investors. Right? So whether it is corporates or HNIs, etc. So the very sophisticated investors have already chosen debt mutual funds as a great way for them to invest. For retail investors, the smaller investors, for of course obvious reasons, when we started, this industry did not have any equity participation and penetration. So mutual fund became equivalent to investing in equity in some form. So, when you invested into mutual funds, you thought you were investing into the equity markets. And that was a great way to at least get people going through SIPs. But as we mature, retail participation in debt through mutual funds offers a humongous opportunity. The ways to do that could also, we can take a leaf out of the SIP growth, where SIP in fixed income is picking up. Because at the end of the day, if a person has a savings pool and you want to allocate between both equity and debt, then one would argue, why only equity? Why not debt as well? Because it's a way of regular savings. What that does then in turn is provide a steady pool of capital into the debt markets as well. And that, of course, leads to the deepening of the market across the credit spectrum. You mentioned that of late there has been one move, but part of that I would say is to go with, where the cycle is, where the spreads are, where the fund managers see investment opportunity, and etc. But over time, the size of pool will become available because savers become investors and debt becomes the first stepping stone to get into this territory. That is humongous, and that leads to a lot of growth in this industry.
Thanks, Vishal. Uh, Mr. Imtiazur, so while we spoke of debt and equity, interestingly, over the last few years, we are seeing development of something which is maybe, as I see it, right in between the two, and that is where the REITs and InvITs kind of come there. And they have kind of, while initially they may have started a little with the spitter spatter, but now they seem to be kind of, picking up growth. More and more individuals accepting that, understanding it. It's a nuanced product. Do you see mutual funds kind of, while there are not too many REITs and InvITs per se, so as a full class of investment, it may not be a very big pool of investments for mutual funds. But how do you see that as a, especially for the yield-seeking investor, where the FD rates are 3-4%, could REITs and InvITs somewhere give, great opportunity for you to invest in paper, which provides better yield?
Good question, Sachin. This REIT and InvIT is a very good asset class, but it has just started, and chairman just spoke in our inaugural session that around 3.5 lakh crore we have a AUM. And this AUM is calculated in a different way with a very, very high big ticket AUM. It's not the very retail AUM. So the size appears very large, but number of InvITs are still very less. But it's a very good investment, I would say. It gives some indicative cash flow, stable cash flow. And regulators are also working very hard to ensure that the fine balances are in place for the proper corporate governance from the builder's perspective or the state perspective. As you know, this asset class still have a lot to do to give the confidence to the general investors about the corporate governance and the other thing. But this is a very good asset class. We as the industry, we are evaluating. We have not come out with a lot of products, but definitely this asset class, the informed investor, HNI, will definitely consider this asset class very actively. Mutual fund probably a little bit far at this particular point of time, but the various credit risk fund, I mean the AIF, which runs the credit fund, they have been actively considering to come out and invest in the REITs. So another asset class which is more important, which will help us, any investor, is through AIF, and we manage one of this, is the credit fund. And this is a new fund, but it goes in the AIF. AIF is another opportunity where the investors can invest. And Sachin, I would, once again say that Indians are not the risk averse. Indians are generally risk takers. And all of us here, including yourself, have taken a huge amount of risk while leaving our own native place to come to Mumbai to work. So we are the risk takers. And definitely mutual fund industry is also educating them that the advantage of taking the risk. So InvIT and the REIT is going to be the new asset class where investors can really invest and secure their future financial need. Sachin, over to you.
Very well said, sir. Very well said. And I completely agree with you that, since while our topic is securing financial independence, my personal experience is, unless you take some risks, you can never actually achieve future financial independence. So the risk and rewards go hand in hand. And therefore, the only thing is, and that's where I think mutual fund industry is playing its role in terms of educating the investors, as you said, in terms of taking the right level of risk, which each individual may be able to cope up with. Let me come to Sandeep now. Sandeep, passive funds. Globally, if you see, ETFs, index funds. People generally say that there is anyway someone who's made an index. It's an intelligent process as well. And there, why do I really, depend on some human deciding on the fund allocation, etc. Let me just go with passive funds. Globally, in fact, I was reading something. They are accounting for nearly $9 trillion out of the $40 trillion, I think, vis-a-vis the mutual fund industry. I think it's a US data, 9 trillion versus 40 trillion. So they have become very, very material, more than 20% or so. How do you see that? In India, we've not seen, while yes, I've seen some growth is happening in the last few years, but do you see that becoming a big amount of money kind of coming into that, especially from, HNIs or even more retail investors? Over to you.
Thanks, Sachin. Then I think it's a very interesting question. I think and the entire industry in India, we keep talking about it. But I think I would like to rephrase it, rather than saying how important ETF is going to be for the mutual fund industry, we have to, for everything what we did in our mutual fund industry, we have to always keep the investor in the center and decide what is good for him and let him decide, take that call. And the entire market cannot be brushed with one, stroke, saying that everybody likes passive, everybody likes ETF, everybody likes active. I think there are markets and there are micro markets. There will be, I think, clearly India, if you were to look at the Indian mutual fund industry, is exactly where US industry was way back in mid 90s, at that point of time. And from there, the ETFs today are about a $10 trillion. Having said that, I remain bullish on ETFs in India. But again, going back to the earlier question, which was about technology, I also remain confident both will coexist. Active, passive, ETF, everything will coexist. Everything will find a place in the investor's portfolio. And as mutual fund industry, our duty and job is to offer the right products and let investor decide. Now, let me give you some data. In India, at this point of time, the ETF is about 3.2 crores. I could be plus minus few thousands here there. But I think what is more interesting is out of this 94%, while there are around 72 lakh folios, but when you look at the AUM, 94% of the AUM comes from corporates, 5% comes from HNIs, and 1% comes from retail. So I think the point I'm trying to make is we've got into this theory in our minds many times, this or that. The coexisting is the mantra, and I believe there will be investors who would gravitate towards ETF, but there would be a very large set of investors who will continue coming in active funds who have to invest in SIPs. Now, again, this example of US, in 10 years, everything changed in US is used very often. I would like to put it this way. We have to also see ETF is like a stock. In India, it is still clubbed under the mutual fund regulation of 1996, but actually it's like a stock. Americans by nature have always been buying stock directly. In India, that has not been the case. Still, you need to push. There has to be a nudge for people to come into capital markets. So I remain very optimistic, bullish on ETFs. Having said that, it will never be a case of this versus that. Active will grow multiple times from here. New investors at the base of the pyramid will keep coming in active. A 100 rupee guy, a 500 rupee guy, today the maids and the drivers, everybody who've never been exposed to capital markets cannot come through ETFs. They will come through active funds and through SIPs. And there will be a set of investors, could be HNIs or the corporates, like as the case right now, they may gravitate towards ETF. So I clearly see a case for both ETF and active to grow multifold from here. But ETFs will come going forward. You will see ETF also coming to center stage, which has not happened in past. but it will not be at the cost of active. It will be along with active.
Got it. Thanks, Sandeep. And from this extreme of, as you mentioned, HNI is kind of being the more prolific investors in this thing. Let me come down to in some ways, the bottom of the pyramid. Nilesh, question to you. While we are talking about mutual funds being at the cusp of a growth and all being fairly positive, but we still see people invest in chit funds, CIS schemes. And a lot of times we hear mostly when they lose money. Unfortunately, that's the way. So I don't know whether that's really the entire truth or whether they actually some of them make money also. But how do you see a mutual fund playing that role from education, from while you did mention about mutual fund Sahiye campaign, and we have greater penetration of media and television today, but still we have these things. Is it that the investor is getting fooled and taken for a ride in some ways? I'm sure you have more in-depth thoughts. So over to you.
So Sachin, we just did one study whereby, based on Google searches of newspaper articles about collective investment schemes going down, we gathered that more than 1 lakh crore has been lost out in this century alone, just 20 years. And this is not even net present value of those money. This is just at face value. Clearly, there is a bottom of pyramid which is not able to invest in financial products wisely. Either they go and invest in gold because they can carry it with themselves rather than keeping in their juggi chopadi, or they get lured by the neighborhood distributor who invariably pushes them in high risk, high return promises. In fact, Sachin, you will be surprised to know that in a state like Kerala, lottery collection is more than the bank deposit mobilization. There is a segment of people which also goes and quote unquote invests in lottery with the aspiration to become rich overnight. Now, we all know these dreams more often than not fail. And it is the duty of mutual fund industry to not only serve the high net worth individuals and upper middle class and middle class, but also carry the fruits of investments and financial decision to bottom of the pyramid. We have been making serious effort in reaching out to bottom of the pyramid so that we can move them from fraudulent collective investment schemes to regulated mutual funds. We have brought down minimum application size to 100. We have created video KYC. We have ensured that distributors are motivated on per application if they mobilize bottom of the pyramid applications. But what we have done is just a very, very small drop compared to what we need to do. Hand on heart, can I say that I have reached out to all the potential customers in Dharavi area of Mumbai? Answer is no. We have barely scratched the surface. And we need to work with regulators and distributors to ensure that benefits of mutual funds reach to the bottom of pyramid. That will be really a satisfaction to all of us that we have made people at the bottom of pyramid richer.
Got it, sir. Thank you. And yes, that's honestly a very, very important point. But I feel that over the last few years, the financial inclusion, opening of bank accounts, those kind of things have also happened. So there is a clear effort from the government also to minimize these peripheral financing schemes.
So, Sachin, if I can take 1 minute to share
Sure,
an experience. I was speaking, we have recently launched the NFO. So I was speaking with one particular bank where I used to work earlier, Axis Bank. And that manager, Pradeep ji, said that Nilesh bhai, you had come 10 years back and you said you do SIP for your near and dear ones. So based on that conversation, I also started SIP for my driver. He deposited 54 installments of 2,000 rupees, aggregating 1,08,000. The driver left him thereafter, but kept the money over there. Very recently, he called up to invite him for his daughter's wedding and also inquired, sir, वो एक SIP का पैसा था, उसका कुछ अगर आप दे सके तो. This guy returned money, and the driver was like crying out of joy tears. The entire daughter's wedding expenditure was met out of that SIP investment. These are the stories which we need to bring out to people. I'm sure that driver will continue to maintain his own SIP now, and he will also probably go and speak to 20 other people saying that how my daughter's wedding was accomplished thanks to this SIP investment on a longer term basis. So this is where we have to deliver to the bottom of pyramid power of compounding, power of long-term investments, and making them richer.
Right, sir. Very, very well said, and a very good example. Vishal, next question. Imtiazur Bhai did mention about AIFs, as being one of the upcoming areas where even the mutual funds are launching them, and maybe they are more targeted towards HNIs. So going forward, do you think that will become kind of a very viable investment option, and maybe more and more people will gravitate towards that, and maybe more someone who are looking at maybe more long-term and close-ended kind of schemes in specific sectors? So over to you.
So Sachin, we have to understand the reason someone is going to make in a certain investment platform, and AIFs do offer some more flexibility that may not be available to regular mutual funds, given the fact that they are largely meant for very sophisticated investors or HNI investors who understand risk better and therefore are able to take a lot more risk. So by its definition as well as the nature of the regulations, firstly, the minimum cutoff that is required is at a very high level. So you need to be a multi-millionaire, or you must have, I would say, easily 10, 15, 20 crores to spare to be able to start making even the first AIF investment, if you don't want to be over concentrated in just one investment, just prudent principles of allocation. Second is, you will choose that because that investment is taking a lot more risk than a regular mutual fund will take, because in many cases AIFs can play in the private market versus mutual funds being the public listed market by and large, or AIFs can take leverage through options and futures, or they can short the market, which mutual funds are not allowed to do. So those are very sophisticated strategies. Okay? And we spent some time today discussing where the nature and size of the opportunity is in India. Right, and we described the pyramid, and you mentioned that the middle to bottom end of the pyramid in India is where the largest size of the opportunity is. I just spoke about the SIP of 2,000 rupees, which is really change the life of a person in many ways, in terms of how this person will now invest, having experienced the success with growth. Right? Will the AIF product be able to change someone's life? I would say no. It is really meant for the sophisticated investor who's doing something on top of what the overall allocation of growth will be. So at the top of the pyramid, if you want to do certain things which can potentially add more value, or give you a different type of a return profile, because you're so sophisticated, it's a great product. And many of us may offer these products as well. But does it have the potential to really get India to be more progressive by investing into something that can generate a lot more growth over time? We spoke about Bharat, we spoke about the middle and bottom of the pyramid, shifting savings behavior to becoming investors. I think the mutual fund product today is definitely the best suited to do that, given so many aspects. The minimum size we spoke about, the access and the access to technology and everything else we spoke about. The regulation itself is such a big strength. The level of transparency, the level of rules that are followed by mutual funds is absolutely the best in class across the world. So we have something so good. We don't really have to compete with any product which may be on the side meant for a very small set, because the center of the plate is still, I think, where the mutual fund is probably the best suited today to make that transition.
Fine, Vishal. I think very valid points. I think even my personal understanding of AIF has improved quite a bit with your response, because yes, it's basically maybe shifting of money. So someone who will invest in AIF, maybe he's already invested in a mutual fund and he will shift from maybe a mutual fund to AIF, and when he's willing to take a bit more risk, or he's this thing. But yeah, you're right in terms of overall growth and from securing financial independence of the middle and bottom of the India, as you said, I think that it may not really play that particular role. Let me get in Mr. Imtiazur again here. And sir, you have been, I think, the longest with the longest experience on the panel, as I see, with Unit Trust of India and now here. Sir, how do you see regulator having played the role? Because there have been at times tough actions taken by them, but in the overall development of the industry over, I would say, 2 or 3 decades, how do you think they have played a very kind of a growth oriented role? And also going forward, do you see any specific actions or any changes that need to happen to further ensure an orderly development of the market?
Thank you, Sachin. Before I start answering on this or sharing my thought, I will request sincerely to Nilesh Bhai to send my compliment to your ex-colleague who works in Axis Bank, used to be UTI Bank, and I had played some role in the development of UTI Bank, which is now Axis Bank. I am not concerned the outcome of the SIP, but I'm indeed highly touched with the humanity which he basically served. And I wish that many of us do like this, which helps the many individual. That raised a bigger question for Nilesh Bhai and also to the former chairman of AMFI. Today, the third-party investment, a third-party bank account is not allowed for the investment. So if anyone thinks to start the investment in the name of the driver, so long as he works with you, is okay. If he does not work with you, how could you fund it? The challenge, Nilesh Bhai, you need to do some work on that. Sachin, I think I must admit that I have seen the Unit Trust of India, which prior to the UTI AMC, both the organizations I have seen. I would say that SEBI has played, SEBI has done a stellar job as a regulator. Whatever the development has happened, SEBI has indeed did orderly. As a regulated industry, we may always feel that this is a disruption, this is not right, but outcome has always been positive. Way back, many years back, entry load was banned. We were very concerned, but AUM grew and is growing, and it cannot be stopped. So SEBI as a regulator has indeed played a very important role. When SEBI started, it was only one organization, Unit Trust of India, with a 47,000 crore of AUM. And in mid of 2021, we are speaking about 36 lakh crore of mutual fund AUM. So many players, and all of us are surviving. We have created a lot of employment. SEBI is indeed a very progressive regulator, very progressive. The amount of access which they provide to us as a mutual fund or any other regulated industry is indeed very commendable. But SEBI has to also do the justice as a regulator, investors first. And as we all have mentioned, and we all are very optimistic, and I'm bond positive, my blood group is B positive. I see a very positive outcome. So there will be a tremendous growth. But if a great regulator is not in place, then there will be misuse. So with the growth, we must have a very robust regulatory system to ensure that, like Nilesh Bhai has said, the trust of individual, trust of investors should not be lost. And that will be done by a regulator to ensure that the trust continues to be there. What SEBI has recently done, the technology is also helping them, is they have an off-site surveillance system that is keeping all of us on toes to become more compliant, more ethical. And in our business, ethics is very, very important, and compliance is very, very important. I have a firm belief the way SEBI has laid down the framework and their attitude. not only the next 5 years, I think in infinite, SEBI will continue to be a very progressive regulator. And SEBI is and will continue to be one of the best regulator in the world. We as an industry will certainly support SEBI to continue to be more vigilant on us. Sachin?
Yeah. Thank you, sir. Thanks. That's quite a thumbs up coming from a leading market participant for the regulator. That's great. So we are nearly to the end of the time. I will have one last question, and Sandeep, that's for you. We have discussed multiple points today. Passive schemes, and then how we can go from India to Bharat, more and more penetration down the income levels, and also the next generation, and how. We are seeing financialization of savings and all that we have kind of discussed. Now, my point is, having done all of that, still the number of subscribers today, or rather investors today in the mutual funds, is about various estimates, but maybe between 2.25 and 2.5 crore individuals. Now, that's still, I mean, a long way off from whatever 120, 130 crores of people that we have in the country. Do you see, while we've discussed a number of avenues already, but in your experience, do you see, are there, other avenues of growth that you see which will kind of pan out for us? And maybe you can take a little long shot, 5 years, 10 years, 20 years, as you see how the industry evolves. Over to you.
Thanks, Sachin. But then I think I'll take up from where Iman mentioned his blood group being B positive. I think one of the landmark, there's another thing called B15. Way back in August 2012, I think in the history of the mutual fund industry that SEBI board meeting will be remembered when first time the term B15 was introduced. And why I say this goes in the line with your question also. I think as we go into Bharat, as we go beyond 2.5 investors, I think direction, push or nudge, everything was initiated by SEBI, and wherever we are today, it's happening because of that. Now, I think this journey to go to small cities and towns has already started. I think it gives so much satisfaction today. Almost every pin code in the country is getting, we are getting investors from every pin code. There are 700 plus districts in India. While I do not have the complete data, but my information tells me we have investors from more than 700 districts in India, and 70 are Nexal infected, so you don't have investors there. I think from my point of view, I remain very, very positive on the mutual fund industry for two reasons. One, as we look at any product, for any industry to survive, you have to, it has to be a value proposition. It has to take care of some need of the investor. And today, what the example Nilesh Bhai gave, I mean, there are millions and millions of stories of people whose lifetime goals or lifetime goals are getting achieved because of mutual funds. We many times hear few negative stories of people who lost money or of mis-selling. But it's human nature. Negative stories emerge more, but there are hundreds and hundreds of positive stories where people have made a lot of have made wealth out of mutual fund industry. And when you have investors making wealth, these brand investors will help us grow this industry even more. If you were to ask me what are the next steps for us to go to my opening comment of being in every Indian household a mutual fund investor, I think the stage is already set. Indians by nature, I think if you were to look at it, the reason why we have one of the highest household saving in the world is by nature, Indians love to save. We are not the Western world that we will go borrow to go for a holiday. We like to save money for our next generation. And if I have to save money for the next generation, everything is falling in place. The natural flow of money is coming into capital markets through stocks, whether, I mean, today you talked about a number of 2.5 crore investors in mutual fund industry. What worries me is something very different. You also have 1.5 crore investors in cryptocurrency. I see that money coming into the mutual fund industry very soon. It's just a matter of time. I mean, all this is nothing different from what the lottery business that Nilesh talked about earlier. So I think the point what I'm trying to say, the stage is set for us. So we do not have to do much. The only thing we have to take care is the responsibility that we have as an industry is we need to ensure our risk management is right. We don't do anything wrong. Investor is bound to come as the per capita income of every Indian goes up. Now, right now we're about 2,000. As we go from 2,000 to 5,000 and 10,000, the basic needs will be met. and the basic nature of human being in India to save for the next generation. This money will flow into the mutual fund industry. So I think we should not commit any mistake is the only thing as a mutual fund industry. This flow of money will come. And what we need to do is, when many times innovation, we try to innovate a lot. I would say the other way around, it's time to keep it very simple so that the common man can understand. We should not try to complicate the investor. Stage is set for every Indian household to be a mutual fund investor, and nothing can stop that. And believe me, a decade from now, when we'll be sitting for the CI summit like this, and in that time, we'll be talking about, now that every Indian household is a mutual fund investor, what next? So I think I remain very, very optimistic and positive about the industry.
Great. Thanks, Sandeep. And I think very well said. Keep it simple. Don't commit mistakes. Earn the trust of the individual. As Nilesh Bhai mentioned before, increasing physical presence. So we are kind of now, anyways, at the end of the time. We are pretty much just maybe 1 minute overshot. I'm happy that we could have a very enriching, insightful discussion. Thanks a lot to all of you. I once again thank Mr. Sandeep Sikka, Mr. Imtiazur Rahman, Mr. Vishal Kapoor, and Mr. Nilesh Shah for their insightful views. And thanks to CII for providing such platforms for this insightful discussion and deliberations. And I also thank all the participants for attending this session. I hope you enjoyed it. Great, sir. Thanks a lot. Thank you.
Thank you,
Thank
Sachin.
you. Thank you.
Thank you, Sachin. Thank you, Nilesh Bhai, Sandeep,
Thank you.
Vishal. Thank you.
Thanks, everyone.
Thank you.